Welcome back to another stock market open stream. Today, we got to talk about the craziness that's going on in Bitcoin. We're going to start with that. Bitcoin and actually gold as well, both rallying together. Really an interesting pattern that we haven't seen before. Gold fell a little bit, again, just over the last few hours here, but over the last days, it's jumped. Take a look at gold, almost 2,100 for gold. A nice rally here. The highest we've seen sitting at about 2087 at this point here. Straight rally since right about Thanksgiving. And the bigger story, though, right now is what's going on with BTC. Jump over to BTC here. We're sitting up at almost a 42,000 right now. A straight rally up, also from a Thanksgiving. Sharp rally since Thanksgiving, and of course, sharp rally since about mid-October when we really had that Bitcoin ETF euphoria start. Now, one of the things that could be driving the Bitcoin euphoria, and it's just one of them, obviously, is the closing in potentially of the BTC ETF. But otherwise, is this. When I throw this on screen here, you'll see this. Kathy Wood tweeting yesterday, U.S. Space Force Major, so an individual who works for the U.S. Space Force, urges the DoD to adopt Bitcoin as a, quote, offset strategy. Suggesting that Bitcoin and its underlying technology can serve as a contemporary tool in an offset strategy, potentially redefining the landscape of cyber warfare. It's based, and she wrote 7 hours here. Part of it seems like it kind of copy pasted it, hence the 7 hours ago part here. But anyway, point here is to say, could this potentially be a real function where as if the United States dollar isn't functional in future combat outside of the banking system, where money needs to be transacted, maybe where we only have some form of interconnectivity between different space stations rather than between banks, is Bitcoin potentially a tool? And then, of course, people have gone wild in commentary about, no, this is what we need Ethereum for, but most of the commentary is very positive towards crypto. It's just a debate now as to which kind of crypto the best choice is. Either way, this has led Coinbase to move substantially well here in pre-market. Last I checked, it was up somewhere around 9%. I think we've also got a Mike Wilson piece that came out, so we'll take a peek at that. But yeah, obviously a lot of enthusiasm for both of these. The question for a lot of folks is this pre-ETF euphoria? Is this something that's actually going to last post-ETF approval? Is the ETF even on its way to getting approved, given the SEC lawsuit with Binance that is still ongoing? A lot of people forget that the SEC is still substantially in a pretty big lawsuit there with Binance. So of course we've still got about another month and a week or so here to go. Maybe more like about a month for that ETF approval before the SEC has to respond, and then potentially could kick the can down the road again. But that is what many are suggesting is driving some of the push that we're seeing here. In addition to these two things, some folks, as the ETF and what Kathy mentioned, of course, you have sort of the natural move for risk-on assets as interest rates could potentially be topping out. And the belief, let's go ahead and hit the Fed term rate right now and see what our upper rate is here. So we have, let's see here, Fed term rate. Okay, we'll pull that up. Well, let's also go ahead and while we pull up the Fed term, let's get the 5-year break even. Okay, Fed term rate, which is going to suggest the high for the Federal Reserve rates going forward, since it appears we already have the high built in. Getting that pulled up. Oh, wow. Okay, and the 5-year break even, which loaded before it, came in at 2.149. So one of the lowest levels we've actually seen. Okay, there we go. Fed term rate. Oh, as I opened it, I hit escape to reload it. All right, fine. While that reloads, the 5-year break even, which is our inflation expectation for the next 5 years, is sitting at roughly the lowest level that we've been in actually about a year here. This is really good, and this is something the Federal Reserve should cheer, because at the same time as we're seeing yields fall, not only are we seeing financial conditions loosen, but we're actually seeing break-even inflation rates come down. That's probably one of the best of both scenarios you could be looking for. Let me hide myself for a moment. The reason I say this could be best of both is what you don't want is you don't want the market to overheat like what we had here in coming into February. Remember January? January and February was really interesting this year because all of a sudden we had this really strong retail sales report for January, and people thought inflation was going to explode. So we had this real inflation fear that came out over here, which the banking crisis quickly crushed. But after the banking crisis got resolved, we saw break-evens rise again. Then we saw artificial intelligence's boom push inflation break-evens down again. After the AI boom went away and some of the pressure of the banking crisis went away, inflation break-evens actually rose, especially over here where Bill Ackman, really pummeled his short against treasuries. Now, though, as you can see, we're right here, which if I draw that line as straight as possible across the map here, or chart, look at that. We're sitting at nearly the lowest level in 5-year break-evens that we've had all year, which is really good. The Fed term rate is sitting at 5.3325, which is a way of saying that we have hit peak, not looking for any kind of increase again in the terminal rate. 5-year forward break-even has also come off some of its highs, sitting at just 2.27. Very consistent with sort of the era before COVID. There have been times the break-even's been lower, usually during times of stress. Oh, is this Mohammed over here? Well, let's listen to what he's saying for a moment.
It has benefited our economy, but it was also associated with a rundown of savings. That's why when you extrapolate forward, most people expect the economy to weaken from the 5%, which it will, but the question is how weak. There is a market romance right now with the softish of soft landing. I think that's probably too much of a romance, but it is one that led to the biggest monthly loosening of financial conditions on record. Think about that.
Yep.
The biggest monthly loosening of financial conditions at a time when the Fed is telling us that it's premature to talk about lower interest rates.
Yeah, but de facto, that's what we're seeing. Do you think the Fed got too tight, Mohammed?
Yes.
Yeah, you've heard me say over and over again that I thought they should have stopped before the last hike. I wouldn't go as far as the market to price in a 50% probability of a March cut and 5 cuts next year, unless you believe we're going into recession. And if you believe we're going into recession, then equities shouldn't be where they are. I think that what you'll see is the Fed will be very careful. Also remember, the best of the inflation move is behind us after this month. So we have one more month of good inflation data, and then it gets a lot tougher. My hope, as you know, Joe, is that the Fed targets a 3% inflation, not a 2% inflation.
No way, dude. It's not going to happen, bro.
The economy.
You think 3% will become the new normal for inflation in the United States?
Nope.
Mohammed?
Look, I think if you look at the economic outlook, it is an outlook where supply is a problem, not demand. Demand was the last decade. We had insufficient demand. Now we have insufficiently flexible supply. And lots of reasons people come on air and talk to you about the energy transition. They talk to you about geopolitics determining supply chains. They talk to you about companies being much more concerned with the resilience. And they also talk to you about the labor market not being as flexible as we'd like it to be. So if you put all that together, we're looking at the supply side being the constraint. In such a world, I really worry that a 2% inflation target means not only sacrifices in growth that we shouldn't make, but also sacrifices in equality that we shouldn't make.
Yeah. Do you, at this point, Mohammed, think that we're still going to have, would you say, a soft landing? Would you
The
be
softest
surprised?
of all soft landings.
That's not, so the softest means you might as well call it a recession, or is it really?
No.
Even softer.
Imagine you're in a plane and the plane lands without you feeling
you don't even know
the wheels hitting the runway. That is what the market is assuming, is that we're going to land this plane, this complicated plane, without even feeling that the wheels have hit the runway. That is what's priced in right now if you look across markets.
That's what's priced in, but and what's more, I mean, it would be unbelievable to have that. Do we miss it? Which way do we miss it?
I think it's a little bit bumpier. I think the risk for growth is on the downside and the risk for inflation is on the upside. It is very difficult to get back to 2% as quickly as the market thinks we're going to get back to 2%.
Okay, and I've seen people say that we're going to see a dollar rally resume in 2024. You see that?
Yeah, I'm in that camp simply because the rest of the world is facing even greater headwinds than we are. So It wouldn't surprise me if by the end of the year, the European Central Bank has cut rates more than the Fed. It would not, even though they started later, it would not surprise me if they end up cutting more than we do in the United States.
Oh, I got a lot to say about this stuff.
But in summary, no more hikes, but you think cuts in the second half of next year, and not as many as we're predicting, as are being predicted. But
that's absolutely right.
That's the way you see it. Okay, we're gonna end it there. All
right. So look, first of all, let's be really clear. The Fed has not pulled some delicious things out of its hat. The Fed hasn't pulled some delicious things out of its hat. Opportunistic disinflation is one of them. Opportunistic disinflation is a way of saying, look, we're just going to support the economy, but if inflation runs higher for longer, I know that might be crazy to think that they might actually say inflation might run higher for longer. And it takes a little bit longer to get from 3.5 to 3 to 2.5 to 2 or whatever. Expressing patience is not a way of changing the target, right? There are two things you can do. You could say we need inflation to be 2%, or you could say, you know what, we're okay with so this is where we stand now. We need inflation to be 2%. There are two things you can do then. You could say, you know what, JK, we'll go ahead and go with 3%. The Fed will never do that because that challenges their credibility. That is a terrible idea for them to do. They won't do that. Not anytime soon. What they may do, though, is option number 2, which is, well, we don't really need to rush to 2%. We could just take our time as we get to 2%. That's called opportunistic disinflation. They just wait for the opportunities where the market itself works inflation down. So I don't see this going to 3%. I do agree, though, that with these rates being priced in, recession is potentially something that's leaning a little bit more on people's minds, especially since take a look at the Q4 Atlanta Fed GDP number. I don't love this. It plummeted over here on the right. You can see we just went from about 1.8 to 2.1%, straight down over here to now just sitting at 1.2%. Nice revision down there, down from 1.8 November 30th, a little bit more before that. And this is driven by, we've got here, let's see here, personal consumption expenditures, growth, fourth quarter GDP growth. We get some deceleration here in a few different items. Basically all merged together pointing towards a lower GDP read. Still positive, but 1.2 is definitely closer to 0 or negative than where we have been. And this is where a lot of folks are thinking, hey, yes, Mohammed, you're right. The Federal Reserve is watching financial conditions loosen at the greatest level we've seen in a very long time. Fine, that's one thing. A. B, yes, we are seeing substantial, how should I say, price cuts being priced in for the Federal Reserve. But what are you seeing the Fed say? At the same time as those are being priced in and we're seeing financial conditions loosen, well, you're seeing the Fed say, well, we're just going to wait and see. So no hawking. Remember Jerome Powell last week? No hawking. We could have easily gotten a hawk. What did we get? We didn't get a hawk. We didn't get a hawk last week when we covered Jerome Powell on Friday. We got someone, dare I say, neutral. So here's some quotes from Nick T. The economy has repeatedly surprised us all and other forecasters. The data will tell us whether we've done enough, whether we need to do more. Let the data reveal the appropriate path. We do not need to be in a rush now. Those are some good quotes. The risks of under and over tightening are becoming more balanced. So this is really interesting because what you're finding is this neutral Jay Powell, which is actually coming across as slightly dovish. You know, when Jay Powell wants to hawk, oh, he's evil. He comes out and it's a pummeling. We've seen it plenty of times before, but sometimes the memes are like so right on when you see the memes and people are like, you know, F your calls, F your puts, we going down. That's great. Anyway, so I do have some news. Only some of you might understand this news, but if I just go to this Twitter homepage here, we'll just mention that. Look, Elon has a recent tweet here. Grow food yourself? Oh, how cool. Let me interact with that tweet. Oh, let me go see what else Elon has posted on his profile. Oh, cool. Favorite sports team? Okay. Oh, look, here's some other tweets from Elon. Oh, that's cool. We got some memes going on over here. Yeah. We'll just leave that over here. So, yeah, that seems to be some interesting news. Okay. In the meantime, let's take a look at what's going on in the pre-market. So in the pre-market, we have QQQ sitting down 59 bips. What do we got here? I was going to say Dow, but I was looking at Coinbase. Coinbase sitting at 9.24. Tesla down 1%. Got Apple down 67 bips. Another Uno there on NVIDIA. Roku down a little bit as well. Enphase up almost 2 Unos. FICO up almost 4. Wow. How are those consumer stocks doing? Let's look at a firm for a moment. What's up, Steve? Yeah, I see your rocks doing well over the weekend here. Gold especially. Jack keeps asking me, where's Steve and when are you going to buy me gold, Dad? That's funny. Trade desk down 179. So let's see here. Let's go with taking a peek quickly. Oh, yeah, Spotify. I saw the Spotify layoff. Spotify to lay off 17% of employees. Let's see. Spotify laying off 17%. Well, right before Christmas, huh? In an email, Spotify was taking substantial action to right-size our costs. Oh, about 1,500 jobs. Could you imagine getting an email? Yeah, we need to right-size our costs, and you're not part of the right side. Oh, that sucks. Economic growth has slowed dramatically and capital has become more expensive. Spotify. Did I say Shopify? I meant to say Spotify. I don't know what I said. But anyway, the right answer is Spotify. Oh, no. The latest round of redundancy follows successive cuts at the company, which, like other growth-oriented tech firms, has been forced to cut back on costs in the last year or so due to high interest rates and a worsening macro backdrop. Ugh. Yeah, rip. All right, let's listen in over here. Who's this guy? Cameron Mitchell? All right, he's got 2 first names. Let's see what he has to say.
I think on the horizon, so I'm still cautiously optimistic going into 2024.
One of the issues is inflation. We've been trying to figure out where things stand, and that has the food aspect to it, but it also has energy and wages. Where do you stand in terms of what you are paying or what your expenses are based on inflation pre and post pandemic?
Well, wages, for instance, we normally increase our prices 2% in the spring and 2% in the fall, about 4% per year, somewhere in that ballpark. And where we took more during the years of the pandemic, this year we passed on our spring price increase, and we only took about 1.5 points this fall. So we feel like we've kind of reached the top end of what our consumer will bear. With that said, labor,
that's pricing right there,
down. They're still up higher than we can raise prices, and still our biggest impact P&L. But they are starting to stabilize. And inflation itself and the food issues are cost of goods. We're seeing not only just in cost of goods, but everything that comes in the back door is starting to reduce a little bit. We're starting to see our prices easing on that side of the fence.
Cameron, one of the reasons I like talking to you is because you cover so many different states, so many different regions, and because we can really get a sense of what small to medium-sized business owners are dealing with. And one of those issues is the availability of capital so that you can do things like open new restaurants. How does that stand, and what are the costs when you do try to build out a new restaurant?
Well, that's been one of the things that's impacted us this year, Becky. We opened 4 restaurants this year, and we're on average, those restaurants were about 6 months delayed in opening, which costs us lost revenue, lost profit, not to mention those restaurants were over budget. So we spent additional dollars to open those. So we've still got supply chain issues on that side with development. We have a full plate of development next year. We have 5 restaurants opening next year. And we hope our situation will be a little bit better, and the cost will come down. We can get them open in a more timely fashion. But on the, when we opened up our Las Vegas restaurant this year, by way of example, it opened up almost 6 months late. However, we had about 5,400 applicants for 180 positions there. So that was really nice for us. We were able to hire just a first-rate staff there, which in years past has been very challenging. So hiring.
So capped out on price increases and being able to hire. These are good things you're hearing here from the restaurant industry.
Credit goes in the banks. We're fortunate. We've got a great relationship with our bank. We've been with them for many, many years. We've worked through the pandemic with them and so forth. So we've still got, access to credit. It's just much more expensive. Where I know some of my smaller restaurant friends, I run a group of 7 restaurateurs here in town, and they're finding it pretty challenging to get access to credit on the smaller business side. So I know it's out there, and it's a challenge, I think, for a lot of our fellow independent restaurateurs out in the country.
But that's the difference between somebody who has more than 60 restaurants and somebody who has 5 or 10 restaurants. You've got a track record.
I think so. Yes, absolutely. Especially the single operator, that 1 or 2 restaurant independent operators really is struggling with credit.
But on the optimistic side, on the good news, it still makes sense for you to continue to open restaurants, and you are.
Right. And there's lead times on those too. Some of these restaurants we've been planning for over 2 years to open. So and we're still taking advantage of some opportunities that have fallen upon us from the pandemic. So it's a combination of those two. But we're still, like I said, I'm still positive, and we are able to. I think our P&L will be a little bit better than this year. Challenge. Our profitability was down about 10% this year, and I think it'll come back. Especially what I'm seeing now, especially with cost of goods coming back in line. That was a big problem for us last year. So that's helping, and it's now coming.
All right, let's go ahead and pull off restaurant industry over here. One of the things that he mentioned that I thought was very interesting is a tightening of small business credit. We're going to go to this piece in a moment. That's fascinating to me because I feel like, you're seeing so much credit loosening on the consumer side. And I'll tell you, boy, in the amount of ads I get for business lines of credit or what, well, then I need to be careful because I think a lot of those ads are credit score based. But yeah, it could be, if somebody has an 800 credit score, which I think mine's like 790 or whatever, then you're going to get a lot more ads. So it's possible maybe there's more pickiness going on in the advertising. So you can't really use an anecdote. I wonder though, because consumer credit, as we're seeing with like Affirm or SoFi or whatever, very, very loose. Small business credit, not a surprise that's tight. It's possible that maybe small business access to credit is also tight because it's so much harder to get equity out of real estate right now. It's very difficult to get equity out of rental properties because a lot of people don't do rental property loans like seconds. You'd have to fully refinance, but then you lose the rate on your first. So real estate is a great tool, by the way, if you're a business owner. This is one of the things I teach in my courses. I'll just give it to you here. Is that there's so much. I'm not afraid of giving away stuff, and people sometimes miss this perspective entirely. And that's what I think is so great about the courses. So you get perspective you didn't even know you were looking for. But real estate is one of the most delicious piggy banks for business owners, because usually what people do is they'll get a home equity line of credit, like let's say on the house they're living in. And then they'll keep the credit line, they'll get another home equity line on the next one. And now what you have is like liquidity for your business. I've had credit lines frequently for businesses, and the business lines of credit that I get are always way smaller than the credit lines I can get from real estate. And the real estate interest rates are way lower. So I'm getting a way better deal on the real estate lines. And they used to be a fantastic tool when I use them all the time for real estate or for any kind of business expansion or whatever. So that's a very interesting tool. But I guess if you have less availability of real estate credit at the same time as maybe less credit availability for a small business, that's a bit of a problem. We do have the jobs report coming out on Friday, which is very exciting. Oh, my leg just fell asleep. Oh, by the way, good news. I can finally drink coffee again. Yesterday was the first day I had, was it the first or say, ow. No, it was actually the second coffee I had. I had 2 coffees over the weekend. I had one Saturday morning for breakfast which I learned something. I learned if you have a meal at an airport, they call it the local regional airports, they call it the $100 hamburger restaurant, because people fly their prop planes to the restaurants, and it's kind of cool. I thought it was really cool. Anyway, that, and then yesterday, so I finally feel better. That means last week, Monday through Friday was the worst, with probably peak actually Wednesday. Anyway, so I'm better. So I'm having coffee again, hence me actually having coffee on stream. So that, A. B, it's really good to hear that businesses can actually hire again, because when you have worker shortages, it's really difficult. Let me look at the JOLTS too and the jobs data coming out Friday. That's when people start really going crazy with their spending, or employers, they start, okay, offer more. But that leads to substantially quicker spending and inflationary problems. When I hear conversations like what we just heard, I don't actually get concerned about inflation anymore. And what we just heard from this CEO of a restaurant group is the same thing that I hear basically daily in earnings calls at companies. When you're paying attention to those earnings calls, you're like, how is the Fed possibly going to be concerned about inflation when for a year straight we've been hearing businesses say we can't raise prices anymore, better availability of workers, blah, blah, supply coming into balance, blah, 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 blah. Like, we are on the right path. I don't even see hotspot. Well, there are hotspots in ski resorts, but there always are because rich people blow money on skiing. And then aerospace. But aerospace is the world changed post-COVID. More people want to fly first class and premier now. People are spending way more. It's actually really weird. People thought like nobody would want to go on airlines anymore. Now people are spending more money, or like business travel would be dead because of Zoom. Business travel is like booming back. And now people are spending more money on first class and premier than ever before. In fact, plane manufacturers are now looking into how can we have more of a premier economy and even smaller normal economy class, which is really annoying because like economy is already tight, and you start getting those like Spirit tray tables. I can't even put a freaking iPad on those. But anyway, Jolts. So two data pieces to talk about here. So number one, Jolts is coming out tomorrow, actually. So we'll cover that. Actually, tomorrow we'll cover that during the course member live stream. That is expected to be, well, because it's at 7 a.m. And hey, look, Kevin's on a schedule now. 5:25 in the morning, we start the stock market open. 6:45 in the morning, we do the course member live. I try to get most of my filming done in the morning so I can work real estate. It's been a lot of work. I had a good weekend though. Weekends are so great for real estate. You get so much done with real estate on the weekend. There's less traffic, open houses galore, and I'm joining like every MLS board I could get my hands on because then I have like all the keys to all the houses are like on my phone. It's great. I just got an exam waiver in a different state as well. We're going to end up licensing HouseHack as a real estate broker. And then in other states, I could just use the fact that I'm a broker here to license HouseHack as a broker in different areas, which is kind of great. Not to say that like, we don't want to work with buyer's agents. Somebody brings us a good deal, we absolutely will. But it's to say that when I'm at a property, I need to be able to get in the door. I can't wait for an agent to show up. So I tend to be able to get around a little faster. But anyway, okay, I want to read these jobs numbers out. I do want to give a quick little pitch here to the HouseHack Twitter channel. If you want more updates on HouseHack, I'm going to be posting a lot more frequently to the HouseHack Twitter channel or X channel. So that is HouseHack Homes. And I have an update here on our first rental property. So you're welcome to see some before and afters over here. Some of them, there are a lot more details to come. But anyway, at HouseHack Homes, somebody stole HouseHack. So I took HouseHack Homes. And I already squatted the HouseHack Homes domain name. So you can't take that from me. Anyway, okay, that's a little bizarre little Twitter post there. Okay, let me just tab away from that. All right. So Jolt data tomorrow, we're looking for job openings to come in at 9.3 million versus the prior of 955. Look, we went all the way down to like 8.7. If this number collapses tomorrow, like we get something like an 8.5 or a 7 in the front, buckle up for rate cuts. Buckle up. It's going to be risky business scrolling through Twitter on a live stream. Yeah. It's not me, man. It's the algorithm. Somebody says BTC is going to outperform HouseHack. I could be optimistic about BTC, but I disagree that BTC will outperform HouseHack. Give me 10 years, and I think I'll prove that substantially right. But we'll see. That's not a guarantee. SEC, that's not a guarantee. But hey, call real estate your diversification. You don't want all growth in your portfolio, right? You want some real estate diversification too, all right? Goodbye, Mom. All right, so let's now jump over to jobs. So jobs on Friday. Jobs on Friday. Oh yeah, here we go. Okay, so Friday we get our jobs report. That's going to be followed by. Why is it not? Yeah, there it is. It is Friday. Okay, sorry. So Wednesday we're going to get our ADP report. We're looking for 125,000 jobs. That's actually more than the 113,000 jobs we got prior. And we'll see. I mean, these are always like wrong. ADP is always at least wrong in terms of predicting the employment report. Employment report's interesting because the employment report is 12.7, which, oh, is that right? No, there it is, 12.8. Okay, that's what I thought. 12.8. Is that right? Yeah, I guess so. Yeah, that's Friday. Okay. So the employment report's 12.8. We're looking for 180,000 jobs versus 150 in the last one. So this will be an interesting week. This is jobs week. So we'll take a look at jobs week. Love God and Neighbor says, this dude needs Jesus ASAP. And then Yashvir says, no diversity, Kevin. The Reich is 100% in BTC. Interesting. Hawaii Airlines. Yeah. Yes, AR. I would say 90% of the information in the courses, especially the real estate part, the other stuff is almost 100%, but 90% of the real estate stuff is applicable in the UK as well. Somebody here says, no way HouseHack will outperform BTC. LOL, LOL, LOL. So I think what people forget is that an investment into HouseHack is an investment into a company, not the real estate. Okay. A tiny little startup with a 1-to-1 valuation has a substantially different future than real estate. Like, if we're just buying underlying real estate and not building a company, well, that's boring. Building the company, that's the juice part. And a tiny, tiny company valuation can way outperform something that already has an $800 billion market cap. Just saying, it's just the law of large numbers. And I'm not saying Bitcoin can't 10x. I'm just saying it's harder for Bitcoin to 10x than it is for a tiny company to 10x. Again, I'm not trying to be Bitcoin bearish. It's just numbers. It's the law of large numbers. It's harder for Apple to 10x now than it is harder for Apple to 10x 20 years ago. Law of large numbers. It's very simple. It's harder for Tesla to 10x now than it has previously, right? Very simple. So now I will press this. Okay. I don't think people really understood what I was doing when I pulled up the Twitter thing. So let me just be crystal clear. Yes, we have good news. I am not blocked by Elon. Okay. I'm not blocked by Elon. Otherwise, this would say you're blocked. Let me show you what it shows. So if I go over here and I say Michael Burry, okay. Wait, is it Michael Burry? I'm pretty sure I gave him an eggplant emoji and he blocked me. Yeah. So as you can see, I'm blocked by Michael Burry. If I go to his profile, right? He said something and all I did is I gave him an eggplant emoji. And I got blocked. And if I go to Elon's profile, I can read his profile. Just saying. Okay. All right. Back to where we were. Bro, Michael Burry. Come on, man. It was an eggplant. I mean, that says more about him than it says about me. Does he have a problem with eggplants? Maybe his eggplant hasn't grown up yet. Okay. Well, I was a douche to Chamath. In fairness, I deserve to be blocked by Chamath. Yes, Chamath blocked me too. But I asked Chamath why was he he was selling Virgin Galactic after being SPAC boy, and I'm like, yo, why are you paper handing space stock? And then he blocked me. And now, in fairness, he sold around $23, and the stock's at $2.34 now. So, in fairness, maybe he was right to sell it, but he was also pumping the poopy doopsies out of it. So there's a weird balance there because it's kind of like, yeah, the stock did go down 90%. So I don't blame you for selling, but you were kind of all in on your own SPAC. It's a little different to be an outside person who's I'm a flip-flop on this. Yeah, I flip-flopped on stuff too, and I think I made that as clear as I possibly could have. But it's another thing when you're paid hundreds of millions of dollars to SPAC IPO it and promote it and then flip-flop on it. Anyways, so yes, Chom SPAC did, yes. Anyway. Buying South Florida says, Having different channels makes it challenging to find your content. Searching Meet Kevin brings up a bunch of trash videos about Kevin. Yeah. Oh, well, we'll have to work through that. Let me just be clear. The biggest and most important channels to hit right now, there's the HouseHack YouTube channel and Twitter channel if you care about that, okay? If you care about that, just subscribe and hit the bell over there. Meet Kevin live every day the market's open, 5:25, and if there's breaking news. Okay? That's 2. Then there's the Meet Kevin podcast, and then there's the main Meet Kevin channel. I understand. That's a lot. Okay? The other one, the politics one, I'm going to turn that into like just chatting or whatever. And then that way I could like Rust stream and people don't get mad at me. I got to do a Rust collab. I hit up a Rust YouTuber. So maybe we'll get to do a Rust collab one of these days. That'll be really fun. So I don't know about you, but for me, I'm very productive in the day if at the end of the day, if Lauren's like, I'm tired, I'm going to bed, I'm like, well, fine then, I'll go play Rust. Speaking of which, if you ever want to play Rust with us, go to metkevin.com/chat and then tag me in the general chat with like your, the Steam profile or whatever. So we can see how many hours you have. And so if you have like, a few K hours, knowing that a lot of them are AFK hours, yeah, maybe that's worth it. You could like farm for us. If you got like 5 hours, maybe you can watch. All right. TS Lombard. Let's see what the resident bears have to say. Oh wow. Okay, we're starting to get some crypto spam here. What do you think about Research Coin 30x already? I have no idea. I've never heard about it. I don't think you really want my opinion. You just wanted me to read it out, and I did, especially since you've been spamming it. I'm a course member. Best thing ever paid for. Thank you, Kevin. Love the new setup. More podcasts. But thank you so much. Yeah, podcast comes back today. Mikey was at the Giga Texas event. I was supposed to go with him, and somebody gave him a Cybertruck backpack. Actually, I think it was What's Inside. So shout out to the What's Inside guy. If he's watching, respect, man. That's cool. I need to come tour your house and we can do a review together. No, I love you, man. I love you. It's going to be okay. I saw your video you saw mine. It's okay. We can still have a beer together. Although I don't know. Do you drink beer? I don't know. Something. It could be Diet Coke. Anyway. All right. So once bitten. Thank you though. That backpack was really cool. I was looking at it yesterday on the plane. So I picked Mikey up. And that was pretty bitchin'. Cybertruck backpack. I like how flat it is in the back because you could really fit like iPads and stuff. Like all backpacks are usually rounded, and this one's much more square, which is great for iPads and laptops. Anyway, once bitten, twice shy, say the bears of TS Lombard. Let's see what they say. The U.S. market is embracing. Oh, what's going on here? Come on, give me my pencil back. Okay. Nope. All right. Well, whatever. I guess it doesn't want me to annotate today. What the hell? Let me. Oh. I see what I did. User error here. Not. Can't blame the app when it's user error. Gosh darn. Oh, it's hot in here. Come on, boy. Oh, I had it on 69. No wonder it's hot in here. Usually I like it at 65. People think that's crazy, but with like 27 different lights on in here, it's hot when the lights turn on. All right. The market is embracing a U.S. soft landing scenario where cooling growth keeps disinflation on track and gives the Fed a license to ease. Yeah. U.S. economic surprises are recoupling lower with the rest of the world, while risk assets are trying to sniff out a cyclical bottom. Right? That is true. Risk assets are doing that. Okay. U.S. bull leaves Eurasian bears behind. Major risks. Substantial strength in bond yields would be a risk. Something breaking, basically. I feel like, okay, that's a different thing. So your risk number one is a substantial rise in yields again. So you really need like Bill Ackman to come, be a little shyster again. Then you have something breaks, which would be bad. But then again, that often drives the Federal Reserve to cut. So is that really bad? Then you've got central banks continue to be whipsawed into aggressive monetary policy, amplifying the volatility of this fake cycle and raising the risk of a global recession. Fake cycle. You hear that a lot as well. It's like, it's a fake rally, bro. Especially from the bear camp. I don't trust the rally, bro. It's fake, man. Maybe it is. I mean, after all, Tesla's down 1.5% right now. QQQ's down 0.84. That's it. It's over. That's it. Some people talking about the TMF. Potential reverse split. Oh, yeah, reverse split pre-market. Well, I mean, look at it. This is a... I mean, that's a good question. Does it make a difference? I mean, does it really make a difference? Why would it matter? It probably has to do with listing requirements, honestly. TMF is this right here. And usually if you fall below $5, you start violating listing requirements. Where's this sucker listed? Let's find out. I didn't know. Oh, there it is. NYSE ARCA. Yeah. The NYSE has a requirement that your stock be worth at least $5, and I'm pretty sure NASDAQ is $4. So if you do, they probably got a little letter in the mail that's like, yo, get your crap up right now. We don't allow stocks under $5 on our exchange. But then, of course, you've seen like Open Door under it. So there's some weird like time frames you have to get above. And then there are also weird exceptions and stuff like that. But you run into these delisting rules. And I wonder if it's just stricter on the ETFs than it is on a NASDAQ listed like Open Door. NASDAQ usually easier ticker symbols, or is it not ticker symbol? Listing requirements than the NYSE. So like, an ETF on the NYSE ARCA exchange is it's going to be have a little bit more restrictive requirements. So that could be why. I don't think there's any. I mean, I would say with almost certainty there's nothing fundamental there that's different. The recessionists have capitulated, and the market is embracing a U.S. soft landing scenario where cooling growth keeps disinflation on track to give the Fed a license to ease, steering the economy to safe waters. Why? Why do you have to talk about a soft landing and waters? This is like a subtle innuendo that we're just landing our plane in the water. Oh, yeah. The miracle of the economy. The big questions for next year are not only about the U.S., but at least as important about whether other economies turn the corner. Economic surprise indices ex-U.S. have recovered in the second half, albeit from lows, and the latest price action in risk assets to betting that the worst of the economy is over. Although it appears that the U.S. cycle is becoming less lopsided, the outlook is more nuanced. In our view, we still see the U.S. bull leaving Eurasian bears behind in 2024. Fourth quarter has been a roller coaster for bonds. Well, yeah, no kidding. 75 bips lower. Broadly speaking, there are two ways to dissect long bond yields. As expectations for the policy rate, the future plus a term premium, and as a sum of real yields and a break-even rate. Okay, so basically, how much risk do you need to take on because of inflation, and what are break-even rates doing? Those are the two ways to kind of price bonds. Over the past month, the term premium has shrunk. Market expectations for Fed cuts have brought forward. Blah, blah, blah. Okay, great. This is just talking about yields a little bit. Price action has followed. Recent Fed officials embracing the Goldilocks narrative. Okay, what else do we have here? Come on, resident bears. Give us something juicy here. Recoupling lower. A closer look at economic surprise indices shows that the U.S. index remains positive but reverting lower. It's true. I mean, we just saw the Federal Reserve expectations for GDP plummet a bit there to 1.2%. In short, if the U.S. is recoupling lower with the rest of the world, what remains to be seen is how much lower. Well, yep, exactly. Industrial momentum is stabilizing. Bad news is that the global industrial cycle remains on the back foot. PMIs for China and Europe remain lackluster, keeping the global index under 50. The good news is that the second derivative is improving. Things are getting less bad. That's just basically a way of saying like the second derivative getting less bad is kind of like if you imagine a line going down like this and it's just like accelerating, like falling off a cliff, kind of like this, where you're accelerating more negatively. The second derivative becoming less negative would be like kind of curving out, still negative, but slowing. So the rate of change of pain is slowing. So why do they have to speak so in tongue? Macro consensus has shifted going into 2023. A narrative was dominated by U.S. recession and the Chinese reopening, which disappointed. Now the pendulum has swung. Concerns about a U.S. recession have been suppressed, and investors remain wary of the economic outlook in China. Okay, fair. Markets move on surprises relative to what's priced in. That is true. So, what's being priced in, earnings revisions turning lower. In our view, the U.S. or the economy is more nuanced. Still see, oh, shoot, I was supposed to be on this tab here. Sorry. I don't know how long I was on that. My bad. I guess reading it is just the same. In our view, the U.S. the economic outlook is more nuanced. Whatever. Okay, I don't think we have anything else here from our resident bears. Let's see here. Oh, here's some nice little bullet points and key takeaways. Q4 spending will slow from Q3. Yeah, although we did have a blockbuster Black Friday in excess of inflation. Home buying is flat. Depends where. You have to be really careful about this and painting with a broad brush. And I know this because I'm in the real estate market daily. The markets that did not boom during COVID are doing much better right now than the overbuilt COVID boom towns. The overbuilt COVID boom towns are having a little oopsie doopsies right now. Looking at 1.5% growth in Q4, that's roughly in line with that 1.2% the Fed now estimate is showing. Okay. Recession like first half is the call. Fed inflation tolerance in 2024 will be higher, willing to accept 3 to 4% inflation. Opportunistic disinflation. All right, whatever. Let's go to CNBC. Oh my gosh, what the heck happened to Hawaiian Holdings?
Internationally. So from Alaska's perspective, this makes 100% sense. And from Hawaii's perspective, look, growing was always going to be a challenge. It's always been a challenge beyond the flights to whether it's Seattle or California or Portland. Growing beyond that has always been a challenge. They now have the heft with Alaska in order to do it.
Phil, there's a rather amazing thing going on here. Those of us who have flown to Hawaii know that it's so expensive because there's no competition. This would really help.
Right.
However, the Tim Wu piece.
Hawaiian Airlines parent soars 180% on Alaska airline deal. $1.9 billion deal from Alaska Airlines. Interesting. So a buyout. Let's see here. This is a Hawaiian Holdings is a $250 million company. So how is this a $1.9 million deal? Alaska Airlines to buy Hawaiian Airlines for a 270% premium. Why? That may attract regulatory scrutiny. Yeah. Oh, it definitely will. Okay. Very interesting. That's why you're seeing Alaska Airlines down. Why would you pay such a premium just to convince shareholders to sell? Very interesting. So here's Alaska Air, which is down 14%. And then Hawaiian Airlines has plummeted. So really, they're only paying, I think, somewhere around, $13, $14 a share? I'm not exactly sure. But I think they're paying somewhere around over here. The stock has just gotten so cheap. I think that's why they're going in for it. They're swooping in for the kill. They're like a vulture. Somebody says save next. That's Spirit. Low-cost carrier Spirit? Yeah, I mean, they're getting cheap. $1.6 billion market cap. Holy crap. Open Door has a higher market cap at $2.2 billion than Spirit Airlines. Blech. 18 a share. Thank you, Common. 18 a share on. I mean, still, when you look at the chart, it's still a deal. It's certainly not the bottom, but another one I look at it, I like, not because I'm going to do it, but I couldn't either. Then we become an investment company. We're regulated by the 1940 Investment Company Act. But anyway, here's a company, Owlet, that has a market cap of $44 million. I'm like, we could just take our HouseHack money and buy a whole company. We're not going to do that. I'm thinking, I'm looking at it like, wow, it's just weird. Weird. Again, real estate. We got plenty of good things going on. But it's such an interesting concept. So anyway, so there's Hawaiian Air. You've got Coinbase up about 7%. Enphase only up about 0.44. Market turning pretty red here in the pre-market. So we'll see what happens when the market opens. Somebody is calling for a 6-month downtrend in NVIDIA stock, suggesting it hit a top. And here comes a 6-month downtrend. This is, let's go to the day chart over here. Up, here it comes, 6 months in, he says. Yeah, Francisco here says it's around 1331. Well, looking at what I saw, I thought it was around 1331. Somebody else says it was around 18. I don't know what it was. I'm trying to find out what it is. Let me see if I can find it. Maybe I can actually get a fact here somewhere. Well, here's the press release. Oh, no, it does say all cash transaction of $18 per share offers an attractive premium for Hawaiian Airlines shareholders and is expected to be accretive, which would be positive, to Alaska Airlines earnings within the next 2 years. It expands fifth largest U.S. airline to a fleet of 365 narrow and wide body airplanes, enabling guests to reach 138 destinations, blah, 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 blah. Yeah. Somebody's saying, thoughts on the BTC rally? You know, if you just rewound to the beginning, you'd have all my thoughts on the BTC rally. You can't miss a minute. You gotta watch the whole video from the beginning. You rewind, and then do what the good followers do. Watch it back on 2x to catch up. Oh, it's all right. Okay. Let's listen in here.
We talked about it last week. Hybrids are so hot right now. I've talked to
When is HouseHack expected to screen for tenants? Why don't you go read the update at HouseHack Homes on Twitter? Okay, HouseHack now has its own Twitter channel, and you will see we've already placed the tenant. Not only that, we've actually placed 2 tenants in 2 different properties. That's right. The snowball is happening. Leased 2 properties in the last couple of days. I did it. I wrote the lease. I signed the puppy. I picked the tenants. I mean, I think I'm gonna pick the first few thousand tenants. It's my job.
that possibility. I think everyone's trying to digest exactly what the impact will be from the UAW strike, Jim. We know that the raw numbers, we know in terms of $900 per vehicle in labor costs increased over the life of the contract. I think that over the next several months, we start to see a little better digestion from investors in terms of the impact. And look, it's not like GM, Ford, and Stellantis are out of moves. And we've actually seen these stocks come back a bit over the last couple of weeks. It's going to be more challenging, obviously, with the new UAW contract. But look, what you see with Ford and the pivot to hybrids, I mean, that was a smart move by Jim Parker. It's very smart move. And they've got a sizable business in hybrids that they can expand on.
To that point, guys, Mizuho does up GM today to buy 42. Strikes in the rearview mirror. Wage increases are offset with some cost reductions, Jim. They're pausing the cruise investments, near 10-year trough valuation.
Look, I think that I don't want to say the tide has turned because the history says we're going to go EV. But there is no doubt that we're in the sweet spot for they have a reason to not do self-drive. And they have a reason to not do EV, so they don't look so bad. They don't have to do the big battery investment for the moment at Ford. I think the story over the next few weeks is Ford's cash, how much it really has.
We'll find out. We'll talk more about the upgrade. There's some Tesla news this morning as well. Phil, thanks. We'll see you in the next hour. Phil LeBeau. The opening bell's coming up in a few moments. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
What's the Tesla news? Let's find out what the Tesla news is. So let's see here. Tesla, individual company news. Tesla China wholesale figures listed at 82,432 units in November. We've got Tesla China made EV. Tesla's China made EV sales skid 17.8% on the year. And some other headlines here. China sales in November sank nearly 20%. After the new Model 3. These are year-over-year numbers. So, China-made EV sales. I'm trying to understand, are these the China sales numbers or the manufactured in China numbers? Let's get to the bottom of that. We've got the bell in about 4 minutes. So, Tesla China. All right, here we go. Tesla sold 82,432 China-made vehicles in November. In the January to November period, Tesla sold 853,000 China-made vehicles. Okay, so I guess it depends how you look at it. Because that's actually, I guess, probably year over year down, but up when you look at the trend of the year. So I guess it depends if you're a bull or a bear in terms of how you look at this. I find that very interesting. So that is fascinating. Yeah, because you've been doing wholesale numbers at 66, 74, 88, 75, 77, 93, 64, 84, 74, 72, 82. That's roughly a slight trend up. Let's see here. But then, yeah, people, okay, like Reuters is calling it, from a month earlier. That's what they're comparing to. No, it's up a month earlier. It was up from 72. It must be a year-over-year comparison. Same month a year earlier. Yep. That's it. Okay. So it's a year-over-year comparison that people are making. So it's actually a good number on the trend throughout the year. However, it is a weaker number when you look at the year-over-year figure. Okay. Got it. All right. Bell is about to commence. Yeah, so that's actually like kind of like a nothing burger, honestly, but that's not abnormal. I wonder if we're gonna get buy the dip here at the beginning. Come on, push it, baby. Let's get a buy the dip at the beginning. See if we can get a BTD. Let's listen in and hear it happen.
They went PVH. They went Victoria's Secret. They went Burlington. This is that whole thing where I'm saying that the half price and full price. So I don't know. I mean, to me, Lulu is so strong, and I think it's going to have a good quarter. But this is what I'm so afraid of. People have said Lulu's moved enough in advance of the quarter. Let's take some profits. Because look what happened in NVIDIA. It started going down. Look what happened with Amazon. Look at what happened with Apple. It's been repelled.
Sure, yeah.
And those are all superior names. Lulu is a superior name. People are laggers. I don't like it when the market rotates to second-tier technical. We need to see that stop and rotate back to Lulu.
Yeah, one of the big calls of the morning, as well as goes to equal weight, Lulu. Let's get the opening bell here at the exchange. At the big board, it's Brixmore Property. At the NASDAQ, Warren T, a Japanese marketing and research company. Jim, as 4,600 remains pretty tough resistance.
It is. Look, I think that all in good time. I really like the market here. I just don't have to love it today.
Wow, that's red.
I mean, I think that what we're seeing is the digestion. I want to see. I think Lulu actually be a great test on Thursday. If it actually starts going back up, what you say is quality is still reigning supreme. But right now, quality is at a discount.
Look at
That's
Look at Lululemon. Holy crap-a-doodles. Jeez Lord. Look at that explosion along with the consumer and retail stocks. Lululemon just absolutely ripping up. This is going back to almost November of 2021 highs of 485, sitting at 459. Holy smokes. Who would have thought the clothing stuff would have blown up this way? Look at, for example, another one. I think was it American Eagle? American Eagle recovering off its bottom. How about we know a firm in terms of a consumer stock recovering off of its bottom? You know that a firm stock looks a lot better when you kind of look at it that way. When you zoom in a little bit. Wow, these consumer stocks really kicking butt. No movement here on the not yet. No real movement yet on the pre-market here from Tesla. Although it's trying 1.2 now. Apple here, trying to red candlestick, along with Nvidia here, down about 2.3%. Enphase trying to pop off a little bit. GameStop down a couple percent. Wow, FICO gave up its pre-market gains of like 3%. Now it's negative 42 bips. Volatility index actually up 6.9 right now. Trade Desk down a couple. You've got Cloudflare roughly flat. Carnival 30 bips. Jack in the Box, HO. Okay, let's look for big movers here. Alaska Airlines down 18. Hawaiian up 176. Some big numbers there on that acquisition. Enphase now 2%. Coinbase up about 5. It was up as much as 9% in the pre-market. Only sitting about 5 now. Beyond Meat's actually up as well. If anybody knows anything about meat, it's Meat Kevin. Not been the biggest fan of Beyond Meat. I also don't really like it. Taste of it. Look, let me just put it this way. If I'm gonna have a hamburger, I'm gonna have this thing from Cronies Bar and Grill. It's basically like, would you call it a dive bar? It's not really a dive bar. It's a sports bar. It's just really cheap, but they are so good. Great community there and delicious double patty hamburger. And you got to put the bacon on there with the garlic cheese, curly fries, juicy. That's what I want. I don't want Beyond Meat. That's just me. So, Beyond Meat, let's see if there's any particular news. Beyond Meat, call volume above normal. Innovative food brands enters Chapter 7 bankruptcy. RIP. Beyond Meat corporate controller steps down. RIP. Alt meat companies are grappling with a harsh reality. I like how now it's called alt meat. Like when it's bad, it's alt meat. When it's good, it's plant-based protein. It's plant-based protein. Now, when everything was mooning, it was plant-based is the way. Now, as everything's crashing, it's alt meat sucks anyway. I feel like being alt anything is bad. You know, it's like alt F4. Like, you know, it's when you're having a bad day. That's like how you rage. And it's like, I'm done with this. Alt F4. Or is that how you turn the cheats on? When you're telling your friends how to turn the cheats on? Yeah, bro. Alt F4, though. You get free stuff. Free loot if you Alt F4, bro. All right. So let's see here. EYPT, insane run up. What is EYPT? Is this some penny stock? Oh, good Lord. Yeah, here we go. $771 million market cap. So it's smaller. It's a pharmaceutical because, of course, everybody's able to predict what pharmaceuticals are going to do, and these gains never go away. If you're in it, take profits. Not financial advice. Don't do what I say. Well, what's going on here? After trial data, macular degeneration treatment shows positive results. Announces data from trial of wet AMD treatment. Advanced macular degeneration. I don't know what any of that stuff means, and I don't understand what it means when you have wet data versus dry data. I don't know. I don't really. I mean, I'm happy. Like, I'm not gonna say I don't care. and happy because obviously advancements in this stuff is good for humanity. But I ain't going to pretend to know anything about pharma. So, yeah, okay. What are they saying over here?
Those are solved. Like J&J wants talc solved. It hasn't been able to figure it out. They should just go call Mike Roman at 3M and say, how do you do it?
Yeah, you've been
Mike,
through.
how do you do it?
You've been through the ringer. Your mention of dividends reminds me of Disney from Friday as well. You've been calling for it for a long time.
I mean, it's like, oh my God, there it is. And one of my Brian Stoto, I was Ben Stoto and Jeff Mark said to me, Jim, everybody knows. I said, no, it's like a really big deal. It's big. It's big. My stage director knew. Brian, he knew.
He's like, oh, yeah.
Yeah, Jim, you told all of us. Everybody.
Boring. Nothing going on. Nothing to see there. All right. Then let's go see what the suits are saying. I always like taking a little peek at what the suits are saying in the morning. All right. Got my little gingerbread man here. So, just need like a rack of Christmas sweaters. Soft landing Nirvana could easily turn into a mirage for assets. The rally in Bitcoin brings more signs that a soft landing Nirvana has descended onto markets heading into 2024. That risk, or rather, the risk is it could turn easily into a mirage if data deteriorates. Womp, womp, womp. Fed Chair Powell signal Friday the Fed is done. 10-year retrace to 4.3. Are we sitting at 4.3? Ew. It's actually like 4.267, but why is it up 4 basis points? Trash. Okay. What is that? Okay, then we've got GDP now down to 1.2. Yeah, I talked about that this morning. I wonder if are the suits copying me now? What is this? Why is there tape at the bottom of my sock too? What is this? This is annoying is what it is. All right. Well, this is what happens when your kids play with tape. It just gets everywhere. What do jobs Fed rate when do jobs/Fed rate cuts cause concerns? That's the question of the day. Shopify cutting 17%. 2 theories as to why gold hit a record. Theory A, Bitcoin tail wagged the gold dog. Bitcoin's been on a bit of a tear lately. Talk about halving in 2024, expectations of a spot exchange. Yeah. Quasi anti-dollar. And number 2, whale executing on option strategy. Looking at timing, super thin liquidity. Maybe you had some whale executing. Okay, some interesting ideas. Asset rallies at risk as liquidity drops. Meets labor data deluge. All-time high in net long JPM Treasury survey. Oh, okay, interesting. Yeah, this is basically a way of saying people's allocations. Is that true? No, that can't be right. Hold up. This comes at a time when a non-negligible drop in liquidity and skewed positioning in bonds. JPM Treasury survey of active clients is registering an all-time high in net longs. JPM Treasury invest. Okay, this is a measure of net longs on treasuries. Yeah, okay, that doesn't mean there's necessarily a lack of liquidity for stocks, though, because you could dump those bonds as you get capital appreciation in the bonds and then buy stocks and fuel the rally in stocks. So, that I think that's a weird thing that I think a lot of people aren't thinking about right now. So think about this for a moment. And we're just mostly thinking this through out loud. I personally believe that a lot of people, and this makes massive logical sense, a lot of people with money bought treasuries, which is smart. Like, not only do you have the potential for locking in, like you buy the 10-year when it's at 5%. What did you do? Well, you locked in 5% every single year for the next 10 years. Locked in. Now, let's say we don't go into recession and yields plummet. You still have 5%, but you also have capital appreciation. You could turn around and sell those bonds for a 10, 20, 30, 40% premium because you have a 5% bond when the market's like 2.5 or 3% maybe. So you sell those bonds for like a sexy premium. Then what do you do with your proceeds? You probably go chase stocks. Like, I hate to say it, okay? I'm not trying to be like perma bull here or whatever, which I don't think I am. I mean, obviously, I had a massive flip flop, which pissed a lot of people off when I turned into a bear for a while. That was one of the loneliest times ever. It's very lonely being a bear. Not one of the saddest times ever, but one of the loneliest times. Those are different. So, money flowing from bonds, like the selling of bonds, has not, in my opinion, happened and won't happen until yields probably get to like 3%. That's when I think you could potentially get into true euphoria in the stock market. So we're not even close to true euphoria. That's my take. I'm sticking to it. I think there's true euphoria ahead. And that's probably a local top, right? That's when there's true euphoria. That's when you say, okay, you've been waiting to get out of stocks for 2 years to diversify into real estate or I don't know, whatever the hell you want to do, or retire. I don't know, whatever you want, right? I think when you get that true euphoria of people dumping bonds again because yields fell and you're not in recession and you get some kind of crazy new highs or whatever, that gets fueled by treasuries. Okay, that point's over. Let's continue to look here. And that's all they're talking about here. Interesting. Morgan Stanley's Mike Wilson, December will be rocky for stocks. U.S. stocks are headed into a rocky end of the year. Okay, bro. Near-term volatility in both rates and equities. This is when you're just constantly wrong. That, now we're just going to go forward. It could go in either direction. Okay. I like the Mike Wilson of the day that's like, this is what's going to happen. Like the early 2023 Mike Wilson. This is how bad it's going to be. This is what's going to happen. It was fun to cover. And I like his perspective. I don't actually think he's terribly wrong. Like, I do think instead of having an earnings recession, though, at one point, I think we're having a little bit more of a rolling stock market recession. And I think that's an easy thing to miss. So I do think that's very interesting. Yeah. Okay, good. So, okay. What else here? So a couple updates. I do want to bring your attention, obviously, to Twitter. If you have not yet followed the HouseHack Homes Twitter channel, it's the official HouseHack channel. Go check that out. Follow that if you want updates on HouseHack. Talk about our first rental. I'll be posting updates on the second rental probably today. And it's official, no longer blocked by Elon. I posted that as well. And now it's disclaimer time because we got to get to the course member live stream. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Look at some of that volatility, man. It is turning out to be a red day. I wonder if we're going to close red. That's always a big tell, is like, are we going to get institutional by the dip? And then for, the mark on close trades, are we going to get some rallies or not? We'll see. I guess we'll find out. See ya later.